Are you feeling stressed out about applying for a student loan? You really don't have to worry because many students are in the exact same shoes that you are in. And while these types of loans might seem complicated, it's really not that hard to understand how they work. Hey everyone, welcome back to the channel. Today, I'm going to show you how to apply for student loans and everything you need to know about them. So in this video, I'll cover everything that you need to know about student loans, focusing on two of the largest lenders in the United States, College Avenue and Sallie Mae. And I'm going to take you through the different types of loans that they offer, explain what fixed and variable rates are all about, what repayment options that you can choose from, and what's the best type of loan for your needs. So if you're looking for a loan to finance your education, stick around and watch this video until the end. And if at any point you decide to try either College Ave or Sallie Mae, if you use the affiliate links that I left down for you in the description, they don't cost you anything, and you might even be eligible for a bit of a discount, which you wouldn't get if you went directly to either of their websites. Okay, so the first one we're going to talk about is College Avenue, which is an online student loan portal that arranges loans and provides financial services for students using a few different banks, meaning they arrange lending for you but don't actually do the lending themselves. And one of the reasons why I like them is that there's a really easy pre-qualification process right on their website that doesn't use a hard credit check that would reflect badly on your credit history. So you don't have to worry about it affecting your credit score. Then once you get pre-qualified, all the deals that you're approved for and that you can get will show up right there on the website. And only after you see your options will you go through the formal application process, which will affect your credit score. So if you type in all the information correctly, you can see all your options really fast without it negatively affecting your credit score, which not all services offer. Okay, so when it comes to their website, College Ave is really easy to use and it's packed with a lot of helpful information about scholarships and loan financing. They offer loans starting as low as $1,000, going all the way up to the full cost of your tuition. They also have refinancing options if you already have student loan debt, which could help you pay less on that debt or even pay it off a lot faster. Now, College Ave is a private lender, which means that they can offer both fixed and variable rate loans. And if you don't know the difference, a fixed rate gives you predictable and unchanging monthly payments, and at College Ave, these start at 3.74%, but a variable rate changes based on market conditions. And at College Ave, they start at 5.59%. So if you're aiming to qualify for a loan from College Avenue, here's what you need to know. You must be at least 16 years old, possess a social security number, and be enrolled in an eligible school. Undergrads and international students will also need a cosigner. The pre-qualification process is also pretty fast, taking only about 3 to 4 minutes to see if you qualify and check potential rates. You'll then have the options for various loan types, including undergrad, graduate, career, parent, or refinancing existing student loans. After selecting your loan term and APR, College Avenue will verify your enrollment and ensure the requested loan amount matches the school's cost of attendance or is less, and academic progress guidelines are met. Once everything is confirmed, College Avenue will disperse the funds directly to your school. One of the advantages of being financed through College Avenue is their flexible terms and various ways to save on the lifetime cost of the loan. Making minimum payments while you're still studying can show the company that your commitment to repaying the loan, which could potentially result in slightly lower interest rates. Additionally, you have the option of paying the interest charges each month while you're in school or opting for a flat rate of $25 a month. Alternatively, you can defer payments until after graduation, but this will result probably in paying a lot more interest over the lifespan of the loan. So I mentioned the fixed and variable rates, and the reason that I recommend College Avenue is that they're all about the students and getting you the best deal possible. They also have lower than average starting rates compared to other lenders in the industry, but their maximum rates are also much higher than averages on student loans, going all the way up to 17.99% on both variable and fixed interest rates for undergrads. But their loans are structured to help you pay off your student loan debt as fast as possible. In that vein, they also encourage you to start paying while you're still studying, and those low starting rates are also there to help you get out of debt faster. And again, if you decide that you want to try either College Avenue or Sallie Mae, check out the affiliate links that I left down in the description below. It won't cost you anything, and you might even be eligible to get a bit of a discount, like I mentioned, which you wouldn't be able to get if you went directly to either of their websites. Okay, so the next company that offers student loans at really affordable rates is Sallie Mae. They're a private student loan provider that started out as a federal student lender back in the 70s. Nowadays, they offer both undergrad and graduate loans, as well as loans for trade schools, and they also fund part-time and international students as well. Now, compared to College Avenue, Sallie Mae offers fewer repayment options and loan term choices. While they don't charge loan application fees, they also lack a pre-qualification process, which means that when you fill out their online application, it impacts your credit history negatively. So to avoid any negative effect on your credit score, it's wise to thoroughly check if you qualify before you apply. Now, to apply for a loan, you'll also need to provide basic personal information and details about your school and the semesters that you're seeking funding for. You should also be aware of your school's total cost of attendance, which includes not only tuition, but also expenses like meals, equipment, and books, stuff like that, usually available on your school's website. And similar to College Avenue and other lenders, your loan amount can't exceed the school's calculated total cost of attendance. If you have a scholarship or a cosigner, you need to include that information as well. And although a cosigner isn't mandatory, students without one generally need a solid credit history to qualify for a loan. And having a cosigner can help secure lower interest rates. So consider asking a parent or another adult with a good credit history to co-sign for you. Okay, so once you've filled in all those details, Sallie Mae will provide a loan application solicitation disclosure outlining the rates, terms, and repayment plans applicable to you. If everything looks good and you decide to proceed, Sallie Mae will work directly with your school to disperse the funds. Now, when it comes to loan terms or how long you have to pay the loan back, Sallie Mae has fewer options than College Ave. They offer either 10 or 15 years for undergrad and career training loans, 15 years for MBA, law, and graduate school loans, and 20 years for medical or dental school loans. Their minimum loan amount is $1,000 and the maximum is 100% of your school's certified expenses with a standard late payment fee of $25, which brings us to repayment plans where you have three choices. You can pay interest or a set amount of $25 a month while you're still in school and during the 6-month grace period after you finish school, or you can start paying after you finish studying and the grace period is up. Obviously, it's best to pay as much as you can while you're still studying if you're able to. It'll also help bring down your rate. That being said, the most important thing is the rate, and Sallie Mae offers a bunch of different rates. But because I mentioned undergrad rates for College Ave specifically, let's see how Sallie Mae compares in that department. So for fixed undergraduate rates, Sallie Mae starts at 3.74%, which is the same as College Ave, and it goes all the way up to 15.49%, which is quite a bit lower than College Ave's highest rate of 17.99%. And when it comes to variable rates, Sallie Mae starts at 5.37%, and their maximum rate is 15.7%, which is quite a bit lower than College Ave. Okay, so this about sums up how to apply for student loans and everything you need to know about them. Now you know what the difference between fixed and variable rates are, what repayment options you can choose, and what's the best type of loan for your needs, hopefully. And the process might seem complicated at first, but it's really not that hard to understand how everything works and what type of loan applies to your financial needs. Okay, that's going to be it for this video. If you found it interesting or helpful, give it a thumbs up and subscribe to see more videos like this. And just to reiterate, if you do decide that you want to try either College Ave or Sallie Mae, check out the affiliate links that are down in the description. They don't cost you anything, and you get a bit of a discount, which you wouldn't get if you went directly to their website. And as always, I enjoy hearing your thoughts, and I'll try to get back any questions or comments you leave down below as fast as I can. And finally, guys, thank you so much for watching, and I'll see you in the next video.